relatively short video today because we are once again in a Fed meeting. The Fed meeting will end tomorrow and the announcement will be made coming out of the Fed meeting. An interest rate increase is expected. The question is how much it will be, and I will address that a bit more shortly later in this video. But in that context, there's not a whole lot to talk about today because the market is waiting for the Fed decision. But nonetheless, there is something to talk about today because it was not a particularly good day given the fact that the market is waiting for a Fed decision. Interest rates continued to rocket up today. Okay. In fact, by the end of the day, the benchmark 10-year Treasury note was just shy of 3.3%, as I recall, before it backed off a little bit. In other words, it went up even more. Okay, it's gone way up over the last few days. Interest rates in general have too. The stock market was struggling all day long. The S&P 500 and the Dow were just trying their level best to not go below zero for the day. The Dow did go below zero early in the day and spent the rest of the day below zero, slowly ratcheting down, fighting desperately not to go any lower. Near the end of the day, it started plunging down and got uncomfortably close to Dow 30,000, uncomfortably close from the point of view of the traders, and then they desperately blasted it back up into the close, trying very desperately to get back up to zero. Did not make it in the process. Very wild swings for intraday situation near the close again, as has happened quite a number of times in the recent past, but in the end the market came back down again some. So it was not a strong day at all going into the day of a Fed announcement, and I have a feeling the Fed announcement tomorrow won't be really helpful to the market either, because the Fed really only changes its interest rates in quarter-point increments or multiples thereof. Okay, in other words, they're looking at either a quarter-point, half-point, or three-quarter-point increase tomorrow. To say for starters that the Federal Reserve doesn't even know exactly which interest rate would be the ideal one. I mean, which real, never mind the quarter-point increases, the quarter-point possibilities, which actual interest rate increase would be the truly correct one to satisfy the marketplace in general, okay, to walk that fine line that people have been talking about lately. Okay, but the reality is, since they're only going to consider one of three possibilities, quarter point, half point, or three-quarter point, the reality is they really can't get there at all, because the ideal interest rate increase would be somewhere in between those numbers, and that isn't going to happen. Okay, it will either be a quarter point, half point, or three-quarter point increase. Okay. An increase is pretty darn certain given recent inflation numbers again. Okay, so one of two things is going to happen, and the second one I'm going to mention I think is the more likely one, but we will see. The first possibility is that they will do just a quarter-point increase, which I suspect will be regarded as not enough, and so the market would react negatively to that. Actually, strictly speaking, it's three cases, but the bottom line is the most optimistic case is where they make a decision that the market initially cheers, but then reality of the real world kicks back in afterwards, and down it goes again. This has happened often enough in the past too already, the fairly recent past. Or they do an interest rate increase that is big enough that it spooks the traders about what is going on, and down the market goes. Okay, I suspect either a half point or a three-quarter point increase will do that. We will see. It's possible that there might be an initial positive reaction to a half-point increase, I doubt that'll last very long given what's going on in the world these days, if that happens. Okay? I suspect the more likely possibility is that there may be a very brief positive reaction, but then it'll start going down after that. Expect the market to be down in coming days and coming times in general. We will see. Okay? I don't think it's going to be a pretty picture. I think it is a matter of and an extension of the idea that the Fed is between a rock and a hard place in the meantime. Okay? We have reached the point where full employment at low inflation, the official dual mandate of the Fed, is a contradiction in terms, and the Fed is going to have no choice but to deal with that situation, which will not be easy to do. As I've said, many people in positive terms have talked about the Fed having to walk a fine line, for the time being to get it right. And my overall assessment of it is good luck, Fed. Your chances of getting it consistently right under the circumstances for as long as you need to, in my opinion, are very low indeed. But we will see. This market is in a very strong downtrend in the meantime overall, not just the Dow, the market overall. And I suspect that downtrend will continue. And the fact that the Fed finds itself between a rock and a hard place in the meantime, and is going to have to make its decisions within that context, thereby resulting in the decisions probably not being perfect, will help contribute to that situation, and maybe even, send it along, so to speak, exacerbate the problem. Okay, help contribute to the environment, and may even help directly contribute to the additional drop in the stock market. In other words, ultimately, the Fed is getting the exact opposite of the result it wants, but that was completely inevitable sooner or later, which is part of the reason why I'm doing these updates. After all, this channel is all about the way the world actually works, as opposed to how economists think it works in the English-speaking world, and how the Fed and economists want it to work. Those two things have kind of been out of sync all along, and in the meantime they're more out of sync than ever.